My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'm going to make friends. I'm just trying to make you a little money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. From the stock market's perspective, this election's become mega versus MAGA. Wall Street's trying to make up its mind about what it means for Biden to drop out of Kamala Harris, almost certainly becoming the Democratic nominee. I think the race will shake out as one candidate who's happy to work with mega cap tech, and then the candidate of MAGA, which doesn't necessarily translate into support for mega cap tech. You can see this view on display all day today. With Dow advanced 128 points, S&P 500 gained 1.08%, but the NASDAQ, the tech-heavy NASDAQ, that went up 1.58%. Pretty much exactly as it should be in a mega versus MAGA stock world. A lot of people seem very confused by the juxtaposition of Kamala Harris and Joe Biden, just as they seem confused by the implications of Donald Trump picking J.D. Vance as his running mate. I am not confused, at least not when it comes to the stock market. Trump adding Vance to the ticket means the Republican Party is going full-on nativist. They're embracing the politics of the late 1800s populist party, although that was considered an extreme left-wing movement at the time, one that was aimed at curtailing the power of the robber barons and the money men on Wall Street. Still, with the Trump-Vance ticket, there can be no doubt the old free market Republicans have been obliterated. In their place is an American-first withdrawal from the rest of the world, where all the money in the industry is left here. Tariffs go up, and the government makes it much harder for businesses to move their operations overseas. The days when other countries threw up tariffs and all sorts of other trade barriers to American goods, then we open our factories there, government does nothing to retaliate, they're done. They're done with Trump. In their place, if Trump is elected, in some cases, will be a pay-to-play military plan, which you could uncharitably call protection money. Novel approach, serious and real bad for business. But it's meant to make America great again, not make business great again. I think that's why the small cap rally has such staying power, just like much of the Russell 2000 roared back in 2016 when Trump was elected president. In fact, that was the last time the index had such a historical prolonged run. The small cap rally is more pronounced this time, possibly because Vance injects a level of certainty into the scheme, and Trump remains heavily favored to win the White House. There's no more lip service. International companies better get their act together with his game plan or get out. The chip NVIDIA is allowed to make, for instance, for China, might be conceivably made illegal under a MAGA regime. But how about the other side of the trade? That's more interesting to me because it just unfolded yesterday, the Kamala Harris side. Here's where I disagree with pretty much everything you've heard about in the last 24 hours. I think Harris would be way better for big business than Biden, and certainly better for big business than Trump. Sure, she wants higher tax rates for corporations. That could be an issue. That was the smokescreen I heard all day today. However, I'm talking about something very different here. I'm talking about an ethos so deep that it's actually somewhat historic. At their best, the Trump-Vance ticket stands for helping small businesses thrive, making them keystones of towns all over America before those towns were crushed by deindustrialization. They see that as a huge problem. They want to bring that world back along with better wages for our workers. Harris, on the other hand, is a true believer in globalization, much like most of our leaders prior to 2016. In Trump's world, Taiwan stole our semiconductor manufacturing jobs, so now it should pay a price for the protection of the U.S. military. But I suspect Harris will share the vision of Gina Raimondo, the current Commerce Secretary, who recognizes Taiwan is a friend, one that needs to be defended, even as we subsidize our own domestic semiconductor manufacturing in order to get more control over the supply chain. What makes Harris different from Biden? Look, President Biden is someone who, by his own admission, doesn't know all that much about capital. He's arguably the most pro-union president in history, something he's proclaimed endlessly. Walk the picket line against Ford. That's been Biden's approach to populism, an adversarial attitude to big business and small business, for that matter. But Harris, I don't think she has the same view. She didn't before she hooked up with Biden and became just vice president. So she's an elected official from California. She knows the people who run Silicon Valley. The people I know who talk to her regard Harris as very sophisticated about what these companies do. And she doesn't want to hector them, as Biden's done rather endlessly through the Federal Trade Commission and the Justice Department's Antitrust Division. Biden's agencies seem to believe big business is bad business. From what I'm hearing, Harris has what I call a more nuanced approach. Moreover, Harris has a secret weapon. her brother-in-law, Tony West. He's the current general counsel of Uber and the former general counsel of PepsiCo. Before that, he served as a key Justice Department official who did his best to fight for the American people against the banks that were partially responsible for the Great Recession. You better believe the general counsel of Uber knows something about the internet and something about the ingenuity of our great American tech businesses. Through the help of West, whom I hope would be a close advisor, there can be a conversation between the people who run these companies and the President of the United States. Right now, I think there's not much discussion. With Biden, instead, it's all done through the regulatory agencies, which, again, are antagonistic to power. The mega caps are often seen as too powerful, hence why Biden's FTC and Justice Department have it in for them. And a Harris regime, mega isn't per se bad. What a change of pace that would be. Now, you may ask, isn't being kind and civil and understanding of mega caps bad for our country? Look, I care greatly about our country, but do you come to me to learn my Hamiltonian view on big business? Do you want to know my feelings about Taiwan and whether they should be punished for taking our businesses? No, you don't. You want to know how to make money from events, and I'm saying to you that Harris would be more understanding president than Biden when it comes to business. She gets that not all businesses are bad. Some are good actors. Sometimes good businesses do things that aren't great, but they don't need to be prosecuted to get them to change, as I feel is currently the case. I don't want to generalize too much about what to expect from her because she just started running. But those who've seen Harris in action, those who've talked to her before she became a team player for the Biden administration, generally seem to respect her as a case-by-case adjudicator. You can see her having an honest, thorough discussion with Tim Cook, CEO of Apple, Andy Jassy, CEO of Amazon, Ruth Porat, president of Alphabet, Jensen Huang, CEO of NVIDIA. That's probably not going to ever happen under President Trump, and it definitely didn't happen under President Biden. The latter seem to be relatively unsure about what these companies even do. Bottom line, if you're looking to invest in tech, you want a world where tech has a voice in Washington, not slash vocal cords under Trump or on mute under Biden. If you own many stocks of international companies and you want to vote your portfolio, Harris is more likely to help than hurt. That's more than I can say about everyone else, and it is why you saw most of mega rally today. How about we go to Tony in Florida, please, Tony?
Hey, Jim, I just want to tell you, you hit it out of the park in the last monthly meeting. You hit a grand slam.
Oh, thank you. Actually, a lot of people like that call. Jeff Marks did a great job, too, when he talked about some new stocks. How can I help you?
Yeah, this holding that I want to get into, I drink every morning now instead of coffee, and it has no sugar in it, so it's a lot better for diabetics like me. And it's trying to go against Munster and everything. It's Celsius Holding. Do you think that the buy that is so low as
I have to tell you, this stock does seem to go down every single day. It's almost as if people felt it had to stay in the sun. I don't necessarily want to write it off, but the numbers have not been good of late. So the stock is going to track that, Tony, until there's some turn. And I know it's down from 99 in a straight line from March, but I have to tell you, if the numbers were better, this wouldn't be happening. Dylan in Texas. Dylan.
Hey, Jim. Thanks for taking my call, buddy. I just wanted to see what your thoughts were on HubSpot, ticker symbol HUBS.
Okay, I think HubSpot is too high. I don't think that, first of all, I really don't like enterprise software, and I've been dead right. I've been dead right to hate enterprise software. Second, this stock is down on was takeover talk, and I don't think it's going to recover all that easily. It's too expensive, and I hope it makes a lot of money next year. But right now, it's just very, very expensive. I'm down on enterprise software. I'm down on HubSpot. I like two enterprise software companies. I like ServiceNow, and I like Salesforce. Let's go to Kevin in Indiana. Kevin.
Hey, Jim. Thanks for taking my call.
Of course. What's up?
Jim, I started investing in the late 90s. The dot-com bubble hit, and I bailed out. I panicked. Then I started listening to you. I got back in on the lows, and the rest is history, Jim.
Oh, fantastic, man. Thank you. You had some good calls. Thank you very much.
I manage over $1 million in the market now, and I'm retired, 67 years old, and it's a lot of fun.
Well played, my friend. Well played. Congratulations.
Thanks for your guidance.
I celebrate people like you. Thank you for calling in.
I'm just a regular Joe Schmo.
We all are, my friend. We all are. How can I help?
Okay. I've had this Whirlpool stock for quite a while, and when it went down to 88, I loaded up on it, and now it's going up. Is it when interest rates come down and housing comes back, is it going to go up more?
Yes, it will. My concern is that I want them to be able to pay that dividend. I do worry that it is not as well. This deal they did, this international deal, I did not like. I've made that very clear. It is a very inexpensive stock, and if you can take a little pain before the dip, it reminds me very much of Best Buy, which you know from the club has been a winner for us, but it sure looked like a loser. They're in the same boat, Best Buy and Whirlpool. So I say we take some pain, we get the gain. If you're looking to invest in tech, you want a world where tech has a voice in Washington. From what I can tell so far, Harris is more likely to help with that than hurt. Well, Mad Money tonight, American Express reported what I thought was an excellent quarter, but its stock fell in response. So has my thesis changed on the credit card company now that we know more about how it's doing? I'll give you my take. Then Intuitive Surgical is firing on all cylinders, but as the stock went up too much to get in the action, I'm sharing where, let's say, what could happen. And Wall Street was not happy with Domino's guidance last week. And with the stock giving up most of this year's gains, what should you make of the pizza chain that I have so long championed? I'm getting the latest from the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.